Welcome to my Debt Cruncher. By purchasing this product, you've taken the first of 3 simple steps in tackling your credit card debt head on. Before you begin, you need to gather all of your credit card statements so that you can start listing your card details. The first piece of information we need is the name of the card. Each card name should be unique. In other words, you can't list the same card twice. So if you have, for example, 2 egg cards, call one Egg 1 and the other Egg 2. You can list up to 10 credit or store cards, but you can only enter one at a time. Once you've started entering a card, you won't be able to move to another row until all the boxes are completed. So it's really important to have all the information you need in front of you before you start. If we identify that you've made a mistake, then we'll highlight the area where the error is and show you the appropriate error message in a red box at the top of the screen, just like this one. You'll need to either make an amendment to what you've entered or delete the card by clicking on the cross here and starting again. Now you need to type in the amount you owe on this card. You can enter an amount up to £50,000. Don't worry about typing in pound signs or commas, we'll do that for you. But for the most accurate results, use your most recent statements. Your next step is to find the annual percentage rate for this card, or the APR as it's more commonly known. This is the annual rate of interest that your lender charges you each year on the debt you have accumulated on your card. You'll normally find this information on the back of your statement. You may find, however, that your lender charges a different APR for, say, card purchases to that of cash transactions or balance transfers or even cheque transactions. These rates can vary dramatically, and we simply can't account for every variation with every card in this program. If you have varying APRs, use the one which applies to the way you've used your card. For example, if you've bought more goods with that card, then use the rate that applies to card purchases, and if you used it to draw cash, then use the cash transactions rate instead. If you're not sure which to use, then contact your card issuer to find out which rate applies to your particular card. Now, if you can only find the monthly interest rate, or the MIR as it's more commonly known, you'll need to use the interest rate converter located at the bottom of the screen. Simply multiplying the monthly rate by 12 doesn't give you the correct annual rate. So if you don't have the APR, but you know the monthly percentage, then enter it in the box on the calculator here, and the annual percentage rate is correctly calculated for you. The next step is to enter that figure into the APR box here. When you first signed up for your credit card, you'd have signed an agreement with your card provider to pay a minimum amount of money off your balance each month. Most card issuers stipulate that amount to be either a minimum percentage of the outstanding balance or a minimum amount, whichever is the greater figure. So for example, if your balance for November is £1,000 and the required minimum is 2.5%, you would have to pay back at least £25 that month. Now this figure shouldn't be confused with the annual percentage rate, or the APR as it's commonly known. The minimum percentage rate is usually between 2 and 10%, and you should be able to find it on your card statement. To make life really complicated, some card issuers are extremely vague, so if you can't find anything about minimum rates, contact your card issuer and get the information from them. It's really important that you understand how vital this information is to enable the program to perform its calculations. The upside is it will change the way you use and repay your credit cards forever. Next, you need to enter the required minimum amount. You should have already found this when you found your minimum percentage rate, but if you haven't, again, this is something you need to ask your card issuer for. It's a monetary value as opposed to a percentage rate which you've just entered in the previous box, and it's usually between £5 and £30. Again, it's vital that you enter the correct figure here so we can work out accurate calculations for you. Do you only pay the minimum amount every month? If you do, then it's exactly what your credit card provider wants you to do. They'll continue to profit out of your debt, and you'll be heading for years and years of it. We'll show you how to get smart and fight back a bit further on in the video. But if you only ever pay the dreaded minimum every month, then tick the box. But I assure you, after completing this exercise, it'll be the last time you do. You'll now see just how much interest you're going to pay on this card, and more importantly, how long it's going to take you to pay it off. Do bear in mind though, this is just the interest. You'll also have your outstanding amount to pay back on top of this. So in this instance, it will be the outstanding balance of £1,000 plus the interest payable at £3,172.54, making a total of £4,172.54. However, if you pay a fixed amount every month, then leave the box unticked and move to the next box so that you can enter your usual monthly amount. By now, you'll have a good idea of just how much your cards are going to cost you. This doesn't account, however, for any additional expenditure, balance transfers, or cash withdrawals that you continue to make. If you still intend to use your cards, then we strongly suggest you repeat this exercise monthly to keep focused and continue chipping away at your debt. If you want to see a chart of the data you've entered, click on the Chart View button here. Now, it's really important to bear in mind that these results are only estimates based on the information that you've entered. Credit card issuers use over a dozen different methods of charging interest, and we simply can't account for every variation. If you had two cards from different issuers, but with exactly the same APR rate, and use them in exactly the same way, one could end up costing you much more than the other just because the interest might be calculated differently. It's now time for you to start listing your cards and facing your credit card debt head on. When you've done that, work your way through the next few screens. Don't forget there's a very comprehensive glossary of terms that will help you with any of the financial phrases or words that you might not understand. So in summary, the information you need to hand now to start using My Debt Cruncher is 1. Your most recent credit card statements for your outstanding balance, 2. Your annual percentage rate for each card or your monthly interest rate, and 3. Your monthly minimum repayment information. And if you're in any doubt at all, call your credit card issuer. Now, if you'd like to see any of this video again, just click on the video tutorial button and select the Face It tab.